What's up, everybody? My name's Chris Marshall with my boy Frank G. We are the hosts of Build Your Empire podcast. Frank, tell the people what we do.
What's going on, guys? Chris and we discuss established empires while showcasing us building ours.
So again, we have another guest. He's making his second appearance. I guess we can call today Stock Market Mondays. Ankit Bhasin, on your second appearance, thank you and welcome.
Welcome back.
Absolutely, guys. Thanks for having me.
Appreciate of course. So, Ankit, last time you came on was probably when quarantine started. It was back in April, so before quarantine. You gave us advice. The market was beginning to utterly just crash. You gave stocks that we should have bought. We definitely should have bought, like Shopify. It went fucking 50%. And now here we are. The market bounced back, and it's pretty incredible.
Yeah, it's the market's come a long way. I think today the headline was that the market's officially positive for 2020. So, even through the coronavirus, through these riots, through, kind of a lot of unrest going on here in the U.S., it's just shock that it's come back this fast. But definitely a lot of big moves, and, happy to go into it with you guys.
Yeah, so, that's got to be like a milestone. That's got to be like a milestone that all that was erased. All the losses were already.
I believe that was the quickest turnaround in the history
of any. I mean, we were in a recession, right? So apparently, this was the deepest yet shortest recession.
It is the fastest recovery of any recession ever. I believe so. And some people are like, they're having trouble. They're saying it is a recession. It was technically a recession, I believe, since things pulled back a certain amount. But, just the sheer speed of it, it's something people haven't seen before.
So that's what I've been researching. And right now, the chart essentially looks like a V, right? It was up, it dropped all the way down, and it bounced back up. But the predictions is that it's going to look like a W, which means it's going to go back down and then go back up.
Mm-hmm.
Everybody's riding that V wave right now.
Yeah, it's really interesting. If you're looking, if you go back a little bit and you see what was working originally, right? The last time we had talked, we were just going into lockdown. Businesses were shutting down. Retail stores didn't know what to do. Restaurants weren't allowed to be open. Bars were closed. It was just kind of mayhem all over the place. And now it seems like people are starting to see the other side. They're starting to see that coronavirus does have an end to it, and that business is going to get back, to maybe a new normal, but somewhat of a normal there. And that V is there because of what I like to call, it's just hope. It's just people seeing hope. The future looks a lot brighter than it did a few weeks ago. And a big part of the market is actually psychology, and it's how people are feeling. And right now they're feeling a lot better than they were a couple of weeks ago, which kind of justifies the price.
As you said, there's feelings of hope. I mean, people have this sense that there's going to be this quick economic recovery. That's when you say it's like hope. I mean, people are putting more money in. So I guess is it because they think the economy is just going to bounce back?
Yeah, it could be. A lot of people do think that there's what's called pent up demand, right? Like, imagine, I know the last time I'm ready to go out to a bar, right? The moment they open up, I'm totally down to go hang out with a couple buddies, have a few beers, and just chill out. And there's a lot of people feeling that same way, that they're ready to go out there, spend a little money. I know I needed a haircut for a little bit, so people are ready to start spending a little bit of money that they might have been able to save up, whether they're, collecting those unemployment checks or just had a job throughout this period. So that pent up demand is really helping drive the market. And those stocks which have been crushed. So you look at the bank stocks, you look at the oil stocks, you look at the travel, right? Airlines, things like that. Those were utterly crushed. And now with the hope coming back, those are really starting to fly here. So what you saw initially was that all the stocks everyone knew would do well in the coronavirus, Costco, you have like the computer stocks, right? You have Clorox. Amazon there. Yeah, Clorox is another great one. the one I mentioned on the last show, Shopify. I think Shopify since then has gone up maybe 100% or so, maybe a little above that. So all the stocks that were poised to do really well did, and now you're starting to see hope on the other side, which is causing, more of the traditional names.
So two things. One, betting on hope does not sound like a good bet. And two, I've also read and researched that the government pumping out dollars and printing money is also potentially inflating the market. And if that's the case, then I mean we're trending high, but wouldn't it be a strategy to maybe sell with the assumption it's gonna go back down?
Yeah, absolutely. I mean, right now where we are, if you have been investing, if you listen to the last show, you've been putting money in slowly, week after week, and you continue to add to your positions. By this point, you should have made some pretty decent gains, whether that means 20%, 15, 25%. It might be time to take a little bit off the table just to lock in a little bit of that money. You made some money. There's a saying that pigs get fed, but hogs get slaughtered, right? So don't be greedy. If you're too greedy, there is a chance that this will come back down, because the market right now, it is expensive, compared to.
It's incredibly expensive.
Yeah, it's very expensive. When you look at the impact of the coronavirus and where the market is today, it doesn't really line up for a lot of people, including myself. So I think a pullback would actually be warranted. Then again, there's another saying, which is don't fight the Fed, right? If the government's printing all this money, you don't want to go against them. So you want to be on their side. So I think the safest approach here, if you made some money, if you've been investing for a little bit, take some off the table. You let the rest ride for a bit and see how things play out, and have some fun with it.
Yeah, I was doing a little research as well, and as Chris said, so yeah, the government spending all this money is helping the market. Now, I think there's two other reasons why I guess investors should be wary, in my opinion, and you can tell me if I'm right or wrong. One of them would be a second wave of the outbreak, where everybody now needs to be limited to public activity, and then a slower expected return to like jobs. I know we just had a ton of jobs replaced in May, or people went back to work in May. I think it was like 2.5 million.
Yeah. The jobs report was a massive shock. No one expected a gain in the number of jobs that people, that would be reported. So it was a massive shock, and it was a shock in a good way. It was a lot more jobs than people expected. I think those are both very valid concerns. People not getting their jobs, not getting their jobs back or not being able to find work, if that goes on for an extended period of time, that is going to become a very, very serious issue. The unemployment rate right now, I believe, is higher than it has ever been in the past.
But
I could be wrong.
I believe that is a direct correlation of the coronavirus, considering that majority of the unemployment are restaurant workers, retail workers, that type of work. Everyone else, for the most part, adapted, innovate. I mean, we're working remotely. So how long are we going to live in fear of a society of a virus? I just would imagine we would just hop back into it no matter what.
And that's where that whole, what Frank was talking about earlier, that whole second wave really comes into play, right? If right now, I think today, Cuomo announced there's no new, in New York City, one of the places that was worst affected, I think there's no new deaths actually as of today from the coronavirus. So, that's fantastic news. Things hopefully should be able to turn around pretty quickly. The unfortunate part is that the moment you see if that does begin to tick back up again, if the cases start to go up, then, it's really that's going to strike a lot of fear into the market. So I think we're a few months away from that. I think people are still, the coronavirus is still pretty fresh. People are still very careful. I can't imagine going on a subway without a mask or hand sanitizer. So I'm sure, plenty of people are in the same boat. So
So
I
you
think right
say
now,
you say it's a couple of months away, which is what we originally planned. But with the current
mhm.
riots, that could potentially speed up that wave.
It could. I think you'll find out in a few weeks that this thing has the coronavirus has a few week incubation time before it really becomes active and shows up in your symptoms. So you'll find out in a little bit whether or not or how much of an impact that's really going to have. In the long run, I know we had a private conversation about this too. In the long run, the impact of all of this this outrage and just the riots themselves and the Black Lives Matter movement, in the long run, it really won't affect the market too much. With regard to the coronavirus, I don't think that'll be the main driver either of increasing cases. I think what you really want to look forward to, where this questions start to come in, is the flu season, right? Because as we go into November, December, people are not going to be sure whether you have the typical flu or whether you have the coronavirus. And that, I think, is going to scare a lot of people. So that's really a time I'd be more interested to look at it. I think right now it's still fresh enough that I wouldn't worry too much about a resurgence at the moment. I'd just be worried that the market is expensive where it is. And maybe things, have been overpriced because of how much money the government has pumped into it. So I'd be a little bit more wary on that at the moment.
Yeah, I mean, right now, it seems like half the population has almost ended the worry of corona in their own minds, and half the population is still afraid to go outside. Because I have family members who wouldn't even want me to do, he wouldn't even want me to protest if I want. I mean, I could have, but I chose not to go. I mean, obviously, those people, they're around thousands of people, so they may think like, all right, it seems to not be a big deal.
Yeah.
So
I mean, absolutely. I think I think those people, they have like a different prerogative in mind where they're not really thinking about the coronavirus when they're protesting that, but
yeah, of course.
but at the same time, it's people are definitely still scared. You see everyone wearing masks out there. On the flip side, you definitely have the younger generations who are a little bit more relaxed about it. I think they're not as worried. So it's going to be very interesting to see how it plays out.
Mm-hmm.
I'm just glad it's not the main headline right now.
Yeah.
Moving forward, it doesn't feel like the world is ending so
Ankit,
much.
let me ask you this, and we try not to get too political here, but I'm new to the game. I've been investing, I don't know, a year and a half now. What happens during, I guess, an election? Does the market fluctuate in those times? Is it good? Is it bad? What dictates that?
Yeah, you'll often hear people say this is going to be a good year. It's an election year. And what they mean by that is whenever a president is trying to get reelected or someone's trying to get reelected, they're going to do whatever they can in order to achieve that goal. And a major, major part of that is the economy, right? It's how people feel about their money moving forward, their livelihoods, their families, whether they're going to be secure. So a major part of that is just the economy. And this is a very clear scenario where you're seeing that, where at the moment, the Fed has already pumped in a few $1 trillion into the market. And yet they're considering doing more on top of that, even though the market is already above where, it's already positive for the year. So in years like this, in election years, they're typically good years for the market because the standing president is going to do whatever he can to make himself look as good as he can so that when the election time does come around, they can hopefully, from their perspective, win again.
But isn't that kind of a false positive? And isn't, I guess, that what they mean when the rich gets richer? Because if you don't have money in the market, you're not making money. But the market's doing so well. So it's like contradiction when you have all this unemployment going on. People are poor, not they can't spend money. And then at the same time, people who have money invested are just killing it.
Yeah, it's actually a major problem from stemming from this coronavirus as well. If you notice, these small mom and pop stores, they were forced to shut down, right? But you have these big box stores like Costco and Walmart, which are still open and have been open and have been doing really well throughout the whole coronavirus. So what you've actually seen throughout the last couple of months is a major increase in not only people going towards technology and new technology and the movement towards digitalization, but also you're seeing that spread between the rich and the poor actually get bigger through the coronavirus. Having money in the market, I think, is more of a financial literacy issue. I think if there was more education around teaching those lower class communities about how the market works and things like that, and assets and liabilities and credit and things like that, you'd see a much bigger uptick, or hopefully that divide would get smaller. But right now, the way it's set up, the rich are getting richer and the poor are getting, on that scale, are not doing as well. So that divide is getting bigger for sure.
Well, I know for one thing, the crisis seems to, I guess if you want to look at something in a positive light, the pandemic, it seems that it potentially could modernize the economy for the future. I mean, we could potentially now be ready for things like this again. And it certainly has helped digital technology. I mean, I don't even remember the percentage that it's went up in the market, but it's everyone's go-to for.
I would imagine, though, as soon as we get back to the world, Zoom is going right back down.
That's only, I would assume, though, that some of us are not going to be going back to work full time, as in office-wise. They will work full time, but they may not go to their office full time.
Yeah, so Zoom, they're one of those coronavirus stocks. Like Zoom has absolutely crushed it. There's another one, CrowdStrike is doing well, Shopify absolutely doing well, Amazon. These are all the companies where all these economists have tried to put a value on it. They say that this coronavirus has sped up the course of time by about 2 or 3 years. That if
perfect sense.
Yeah, if we didn't have the coronavirus, where we are today with everyone being online, Zoom, and video conferencing, that would have been about 3 years down the line, and that this coronavirus has just really sped all of that up. So I think it's normal to expect a little bit of a pullback on them as as people return to work, but at the same time, companies are realizing how people aren't, in most roles, aren't much more unproductive or aren't less productive than they are in the office. So, you look at companies like Twitter, they're allowing all of their employees to work from home moving forward. And I think
you said less productive or more productive?
No, you see that they're not really less productive. It's you've actually, in most roles, in most engineering, computer science roles, things like that, most of the roles where you would be allowed to work from home, you've actually seen over the past couple of months an uptick in productivity for people in those roles.
Probably with less amount of time as well. I mean, these companies we're naming, even our company, I mean, you're hiring responsible adults.
Yeah, absolutely. So these are people who are ready to work, and they're actually doing it better from home, which means that moving forward, Zoom, these companies are probably poised to do pretty well. Are they going to do as well as they've done the last year? Absolutely. That's another question, because I think this has made them grow like crazy.
Well, my concern with a company like Zoom is that you have like a Facebook or a Microsoft that quickly comes with a more efficient Zoom-like program, which everybody uses.
Mm-hmm. Yeah. I mean, to be honest, I'm shocked. I am shocked Zoom has been able to grow this quick. And it's a very competitive space. You go back 20 years ago, Skype has been doing this for a long time. Mm-hmm. You have Skype, you have Microsoft Teams, you have, I'm sure, that Slack, if they're not doing it already, are going to be doing it. You have Zoom itself. You have Google Hangouts. There are all these competitors, but for some reason, Zoom is really the one that's stuck. So they do have a tough road ahead. For me personally, it's not one of my picks. I'm not really a fan of Zoom. One, it is a Chinese company, so Chinese companies are they have a little bit more leeway when it comes to the numbers and reporting and things like that. So I'd be a little careful about that. And two, I mean, it's run up so much. A company, the stock has gone up so much so fast that it raises the question, is it out of gas? Is it out of gas, or doesn't have that catalyst that it's had for so many months? So it's not one of my picks moving forward. I think you'll do fine if you're in it, but I think there are easier plays, probably easier plays.
Well, so tech is clearly doing well in a time where businesses, I guess, are closed and people are using technology. One stock that is also doing well that I got into right before or right when quarantine started and the stocks dropped was airlines, United,
Mm-hmm.
Delta, and JetBlue. Right now they seem to be leading the way in how well they're doing.
Mm-hmm.
But like you said, I think everybody does have this pent up buying surge coming. I mean, I certainly want to go away. I'm looking to go somewhere as soon as I can.
Dude, I know. I'm with you on that, man. I'm done being, cooped up in a New York City apartment. But for sure, these airlines.
Feel free to come to the lake house. We got plenty of beds.
I wouldn't mind, man. I wouldn't mind. Let me see if I can get a few days off. I'll keep you in the loop.
I'll let you know. The answer is no for the days off.
No, but these airlines. There was a very big. Airlines are really historically a very difficult business.
Yeah.
Always, even in good times, to be an airline and make money is very tough because not everyone that goes on that plane is paying the same amount. So each person is paying a different amount. Sometimes all of those people together, if you don't get enough people on the flight, it's actually not covering the cost of how much it's going to cost that company to fly. So, JetBlue has
like
50%. Yeah. I'm not exactly sure how a city bus works, but
I mean, if you have 5 people on a city bus and the city bus has to pay tolls to go to New York City, they're losing money on that trip.
It's probably more, it's more expensive than just not having the trip, but they do it anyway. They do it anyway in order to entice people moving forward, show the convenience, and for them, it might actually make more sense to keep everybody employed, just get some of their money back if they don't get everything. So airlines is a very difficult business in normal times. I was looking at a stat the other day where the number of riders of planes at the moment is about 20% of what it was. And that's up major from where it was 2 months ago, but it's about 20% of what it was this time last year. So what you're seeing here in the airlines is exactly kind of what we were going back to in the beginning of the show, where we're talking about hope. You're really looking at a company where things are looking slightly better today than they were 3 days ago or a month ago. And because of that, the company's going up. It's not the actual numbers. The fundamentals aren't better. It's really just hope is what you're betting on here. So for me, airlines, while you can make a lot of money, if you're holding on to it, I would recommend taking a little bit of money off of it. But airlines, is one where it's a tough business before the coronavirus. And after the virus, I think it's going to be even more difficult long term. If you have some gains, I would take some of that off the table for sure.
Yeah, because I was, when I invested, I was doing research, and I mean, what I read was that airlines run a lot of debt. Their cash flow volatility is like high. I mean, and there was a few reasons, but yeah, it seems it increased like 40. I don't even know, probably more than that, something percentage, but yeah, it's made me a good amount of money.
Which is funny. We had CEO Jared on the show who owns a business, and at the end of the show, I asked him for advice, and he said, JP Morgan, he reached out to me today, Ankit, and he was like, hey, if your listeners took my advice, they're up 40%. And
Right.
I wish I did there.
Right. So JPM, that's actually one of the names which I was adding to very heavily. I didn't have a bank. I didn't like the banks very much going into the coronavirus. But I'm bringing it up right now, and I started buying JP Morgan at about $88. I started buying JP Morgan. So you look at the price today, it's at 113. And yeah, it's been a great play. I think the banks are a much better place to be than the airlines. The banks have a lot of exposure to people, just credit out there. That's how they make their money, right? They extend credit to people. But I would feel a lot safer, and that's one of the ones I did take on is a bank, and specifically
So
JP Morgan.
I'm upset you say that, because when Jared told me that, I came to you and you pretty much said, don't put money in there, but that's okay. And Ankit, if you look up on the Zoom, clearly we don't have the premium. It says we have 4 minutes, 30 seconds left. So we got to ask you, with the market being at an all-time high, what are you looking at right now? What would be a buy? Would you buy? What industries are you looking at?
Yeah. I think right now you want to be a little careful. Make sure make sure you actually know what the company does, how it makes money, what the cash flow looks like. What I personally am looking at, the name I have been looking at for a while as well, throughout the coronavirus, is a company called AbbVie, ABBV. I've been holding the company since 2017. It's at $65 at that time. Today it's sitting at about $94.60 at the moment. I think this one has a really, really strong feature. It pays you a 5% yield as a dividend. So even if it doesn't go up, if it goes down, it's going to pay you 5% a year. They own Humira, which is the biggest drug in the world. It is actually the number one selling drug in the world at the moment. And they just bought the company that owns Botox as well. So as we look to come out of the coronavirus, as people travel more, as they vacation more, I think Botox and, that whole Instagram generation, the way people care about how they look, I think Botox is poised to do really well moving forward. And this company is going to pay you regardless. They pay you a nice dividend even if it doesn't. So that's one of the big names. It's a healthcare company. One of the names I've been looking at. I've been buying pretty heavily over the past couple months as well, and that's one of the ones I would buy moving forward too. I think.
Ladies and gentlemen, ABBI. We're gonna hold Ankit to it.
ABBV.
Say that again.
ABBV.
Oh.
ABBV. Okay. Yeah, we're gonna hold you to that. And I've taken your advice. You made me some money. You've also lost me some money, but that's the game. But we always appreciate you hopping on, giving us your knowledge,
sir.
A lot of value. I'm sure you're going to be on many times. Frank G, you got something to say?
I just want to say thank you, Ankit, again, hopping on. Appreciate you giving the stock advice to the people. And you guys can check us out, Build Your Empire, every Monday and Thursday.
Ankit, we love you, man.
Awesome. Sounds good, Dennis. It's been a pleasure as always, man. I'll talk to you in a bit. Love you guys.
We out.
Take it easy.